Kalpataru Projects is one stock that is in focus in the last 1 year. The share prices have gained close to 50 odd percent. Amit, the director of Kalpataru Projects, joins us to give us more details about the company and to give us some outlook going forward. Firstly, the company also recently raised, if you see, close to 300 crore rupees through our debt, and this was to fuel future growth and capital expenditure plans. So, firstly, Amit, if you see the demand, how are you seeing the demand outlook and the ordering activity on the ground, and are you sticking to your guidance 26,000 crore for order inflow for the year?
So as of now, we would like to think that our guidance is intact. We are already sitting on a very high order book of almost close to 45,000 crores at the end of FY23 with another 4-5,000 crores in L1, which we are trying to convert currently. And at that kind of order book, we are already sitting at a good visibility of 2+ years of revenue. And this order guidance of 26,000 crores is, I think we should be able to meet. We are quite optimistic that this should happen by the end of the year.
Also, if you could tell us which business segments are showing maximum growth, is it the railways, the T&D, or the oil and gas segment, and how is the outlook when it comes to the exports market?
So we've been increasingly balancing our businesses with international and domestic, and that percentage has been steadily increasing. We want to make sure that it's a sustainable business as much as it is in India, as it is outside of India over a period of time, because it gives us a natural hedge against, certain slowdowns or certain effects that happen in one country that gets mitigated by the other. Today, we are at almost 60% of domestic business in terms of order book and 40% in terms of international. So we are well balanced in terms of our portfolio skew. If you ask me specifically which businesses are doing in terms of projections, if you look at our T&D business today is steadily, as the pie keeps increasing of our business activity, our other businesses that we've been seeding over the last 4 or 5 years have started becoming businesses to scale. So, for example, our water business, our building and factories business, they contribute almost close to, 45% of our overall business mix today. And as these businesses keep scaling, not just in India, and as they keep scaling internationally, this gives us a very robust outlook in terms of our business growth, not being concentrated on any one business. So far as railways is concerned in India, railway electrification now is a business which is matured. Electrification is, almost done. So we are looking at adjacencies in railways to get into metros, to get into other areas of railway business. And I think those will drive growth going forward. But if you ask me for the next, 12 to 24 months, I think it's our water, it's our building, and our transmission businesses which are going to scale. We've spent the last...
Well, also the Kalpataru Power and JMC projects merger that was announced, that was completed, in fact, has the synergies played out?
This is a great question, and our team has, worked tirelessly on this. As you can imagine, to merge two entities which are both listed and having different businesses within the same larger EPC domain is not always easy, right? But we have to really pat our back because we've had a seamless merger, whether was it from a compliance standpoint, governance standpoint, integration of our two different teams, and this has been seamless. And we can already start. So 1st April is when the merger got effective. Now, we were having, close to 200 basis point difference in our borrowing cost with erstwhile JMC and KPTL. And those benefits we can see immediately start accruing because our interest rates get rationalized for working capital on the larger combined entity of KPIL today, as we've renamed it Kalpataru Projects International Limited. And over the year and for the next year, synergies will start playing out, right? Because the rates have already got rationalized. The effect of that will start coming in the subsequent quarters towards the end of FY24 and beyond. In terms of our people cost, in terms of our technology cost, our licensing cost, all of these costs have started now getting rationalized as a part of the merger. and these costs are also going to start contributing towards our bottom line in the quarters to come.
Well, thank you, Amit, for joining us and giving us all those details related to Kalpataru projects.